Welcome back. You're watching The Money Show with me, Kavita Thaplial, and that's the last part of the show where we take viewer queries because there are a plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Pankaj Matpal, MD, Optima Money Managers. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us on themoneyshow@etnow.tv. All right, good evening and welcome, Pankaj, to the show today. And let's get our first viewer online, Mr. Janardhan HL. Good evening, sir. How are you doing?
Fine, ma'am.
Mr.
I'm
Janardhan?
Janardhan from Bangalore.
Hi. Okay, hi. All right, thank you so much for sending us your question. You want to understand the tax treatment? Yeah, sure.
Yes, ma'am. Yes, ma'am.
All right, are you already invested in mutual
Yes, ma'am.
funds?
From last 1 year,
Okay.
I have started investing in SIP. So I'm a long-term investor, planning to invest for next 15 years. Just I wanted to
Sure.
know the tax implication on the mutual fund redemption.
Sure. Are your funds equity-oriented funds?
80% equity and 20% debt, ma'am.
All right. So let's explain you and in fact the rest of the viewers also the tax implication that's involved in equity mutual funds and debt mutual funds where there has been a major change also. Pankaj.
Yeah. See, till 31st March 2023, there were two categories for taxation purpose, one equity and non-equity. So any mutual fund which has equity allocation, minimum 65% in that was equity, and now also that is called equity. Another category was non-equity where the equity allocation was less than 65%. But now from 1st April 2023, there are three categories. So one, as I mentioned earlier, equity category, it may be equity or hybrid, but equity allocation in that scheme of the total asset of that scheme should be minimum 65% to qualify for equity. Another category is, we'll say debt, where the equity allocation is less than 35%. So it may be equity, it may be, conservative hybrid, it may be debt, it may be gold or silver fund. So these are debt funds now for taxation purpose. Third category is again hybrid, where equity allocation is above 35% of the total asset of that scheme, but below 65%. So that is another category. So equity category, when we calculate tax, holding period up to 1 year, or you say 12 months is short term, about 12 months is long term. In short term, whatever the total gain, that will be taxed at 15%, and the capital gain, which is long term in nature, is taxable at 10%. And there, one important point, that up to 1 lakh long-term capital gains from equity in one financial year are exempted, and only amount exceeding rupees 1 lakh will be taxable. So this is about equity. And as I said, one category, debt, where the equity allocation is less than 35%. There is not short term or long term. Whatever total gains will be taxable at your slab rate. Means you are in 5%, 20%, 30%. Whatever the income tax rates are applicable to you, the capital gain will be taxed accordingly. But this is applicable only for the units which have been purchased on or after 1st April 2023. If you invested earlier than that, then old rates will be applicable. And another category, as I said, where the equity allocation is above 35%, but less than 65%, there a period up to 3 years is short term, above 3 years long term. In short term, the total gains are taxable at slab rate of the investors, and long-term capital gains are taxed at 20% with the benefit of indexation. But in this category, not many choices are available. So right now, either the funds qualify for equity taxation or they qualify for debt where there is no indexation benefit. But for the understanding, there are these three categories for the calculation of tax.
All right, so very well explained. All the best, Mr. Janardhan, with your investment portfolio, and I hope that you've got the tax implications answered. We move on. I have Thomas' question, and he has invested. He's invested in HDFC Nifty 50 Index Fund, Parag Parikh Flexi Cap, PGI Mid Cap Opportunity, Axis Growth Opportunity, and he wants to understand if he can move to a passive Nifty 150 Mid Cap Index Fund for better returns. And he also has to say that the goal that for which he's investing is for his kids' education and a house. All right, Pankaj.
Kavita, see, if you talk about large cap index, Nifty 50 or Nifty 100, so I have seen that most of actively managed funds have failed to outperform these indices. But when we talk about mid cap or small cap, most of actively managed funds have outperformed these respective benchmarks indices. So considering that fact, when Thomas wants to know about the mid cap index fund or actively managed, my suggestion would be that he should stay invested or he should invest in actively managed fund. Or if you want to invest in two funds, then it can be a choice that one mid cap index and one mid cap actively managed fund. And what I understand here, because Thomas has PGI India Mid Cap Opportunities Fund in his portfolio, and he may not be happy with the performance of the last 1 year of that scheme. But if you see the portfolio of that scheme, I expect that scheme will perform better. Last 1 year has not been very good for the scheme, but Thomas should stay invested in that scheme. And in general, also, I'll say for mid cap and small cap that you should have actively managed funds in your portfolio.
All right, so that's a solution. We move on and we take Abhishek Basu's question. And he wants to do an investment for a long term, almost 20 years. And he also wants you to explain him whether he should be in an index-oriented fund for 5 years, or he can switch on to some other strategy. Okay, so the question over here, sorry, I think I read it wrong. He wants to understand that if the fund is not able to beat the index in the first 5 years, should he be continuing in that particular fund, or he should switch to another fund just because there are no benchmark or index beating returns?
Definitely, Kavita. See, though I'm against switching from one scheme to another scheme very frequently, but as it is mentioned very specifically, 5 years. So if a scheme is unable to beat its benchmark for 5 years, then definitely you should think about switching from that scheme. Even for 2-3 years also. See, it may be a short period of 6 months, 1 year.
So over here,
Pankaj,
like for example, for example, we've seen the large cap category not performing really well since a couple of years. So even then, when not only your fund, but the entire group of that particular category is not performing, even then you think that one should be ready to switch if the category itself is not performing?
Definitely, Kavita, if any category, what is the objective of actively managed fund? To beat the benchmark. If an actively managed fund is unable to beat its benchmark for long term, or you are saying that we are seeing consistently, means returns are lesser than the benchmark, then there is no reason to stay in those funds. But yes, if you see that there is some period where the schemes are not performing, but in long term, there are schemes which have been able to beat their benchmark, then only you should think about. But in large cap, I agree, most of large caps have failed. Actively managed funds have failed to beat their benchmark. So that is why means now you go for large and mid cap fund, or you go for mid cap funds. That should be the strategy. But purely large cap these days, even my observation is this, that most of schemes have failed to beat their benchmark. In that case, it is better to invest in Nifty 50, Nifty 100, or we have other large cap like equal weight index funds or something like this. So investors should go for that.
All right, I think with that, it's a wrap. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. And time to sign off, but I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your financial portfolio queries. Thank you so much for watching. Goodbye.